Welcome to the Predictive Playbook. I'm your host, John Ryan, and I hope you like that music and the animation. We'll make it a little bit shorter next time because we have some pretty pressing news here. I have my good trading pal and sports betting pal. I guess there's maybe one other at WagerTalk and Sports Memo, but you're definitely number one on the list. Steve Merrill from WagerTalk, welcome to the show. We're going to talk about Bitcoin today and a few other things. I actually looked at DraftKings and Endeavor, which is the UFC for those that don't know. But welcome to the show, Steve.
Yeah, John, it's great to be here as always. And Wednesday's usually a pretty slow day for sports. We have only a couple basketball games, but it's been a pretty exciting day in the financial markets and especially the crypto markets, to say the least.
It has. And for those that are listening to this for the first time, I was fortunate enough, lucky enough to get short at 58,000 based off of some of my charts, and I follow candlesticks like Steve does. And you can see on this chart, you had the top here, you had the inverted hammer, which I wish I had my pointer here and I could point to it, but it's about a third of the way from going right to left. So if we were to look at, it's basically to Steve's, about 6 inches past Steve's right shoulder, if we put the chart back up. So then you can see the gap down. And then we have a dramatic rally later on. The rallies are in green. That means the close is higher than the opening. And then we have the engulfing candle, which if you count back 1, 2, 3, 4, 5, 6, 7, 8 days, it's a red candle. It makes an engulfing candle is higher high than the previous day, lower low than the previous day, and closes below the low of the previous day. So you get an engulfing candle. It's bigger than the previous day, and it's red, and it's bearish. And then 2 days later, we got another one, and that was last Monday, I believe. Wednesday, Thursday. Well, today's Wednesday, right? Wednesday, Tuesday, Monday, Friday, Thursday, last Wednesday. And that's really what set the whole thing in motion to get to where we were today, where, if you woke up at the right time, you were seeing Bitcoin under 30,000. And that's a 50% loss in about a week. So I'll give my take here real quick, Steve, and then I'll let you, offer your insights too. And I just wanted to emphasize, and like I did in the description, we're not, licensed, certified professional planners. We don't deal with people's IRAs or any of the kind. So this is just our opinions, and want to emphasize that very clearly. You really should, if you're considering doing this and you never did it, you should go to your financial advisor or somebody that's licensed in the industry, and get their opinion first and foremost before you embark in the shark-infested waters of cryptocurrencies. I worked on Wall Street for a long time, so I have tons of experience, but that doesn't mean my opinions are going to work out. So act like any of my opinions are going to lose every single time, and we'll get along just fine. So we have a dramatic inverted hammer here. Generally speaking, the fact that we're red hammer and have that huge wick going all the way down to the $29,000 level portends a very high probability that we get a retest of those lows either tomorrow or Friday. Could extend into Monday. But it would be very unusual for those lows not to be retested. And if you're bullish, you don't want those taken out. We've already gone through the 50% retracement level in the Fibonacci's, and any close on a weekly basis below the 50% Fibonacci basically starts to negate the whole bull trend. And I was one that said that we'll get a correction. It'll get people's attention, and it sure did. But I also said that I think it's going to set the stage for a move to 100 grand or beyond. I'm on the fence now with that part of it, and I am still short the position, and we'll be looking to cover probably tomorrow if we get a retest of those lows. So there, Steve, I'll stop putting people to sleep and let you offer your thoughts on this unprecedented move.
Yeah, well, just to put everything in perspective here, I look at the daily bars like you do, exactly what you're looking at there, the candlesticks, and you'll see that one on the far right. You really have to look to realize how far down the tail of that candlestick goes. And like you said, it basically touched a little over 30,000 at 9 a.m. Eastern this morning on Wednesday. And let's put that in perspective. At 8:48 a.m., it was 35,000. At 9:02, it was 30,000. So you're talking about a 14% loss, $5,000 move in 15 minutes. And let's also keep in mind that the futures contract, which, by the way, is the way to trade this, as John and I both agree, is 5 contracts on the CME. So that's a $25,000 move up or down within 15 minutes in your account. So I just want to put that in perspective, like we talked about last week from a money management perspective, that you're playing with some big money here, and you better make sure your bankroll can take these swings. And we said last week, I said that the average daily move was about $4,000 up or down on a given day, and that's the average. There were some more extremes in that, and we've seen that today. It's been about a $15,000 average true range from top to bottom today. So you have to understand what you're playing. And like John said also, we're not professional financial advisors. We're sports bettors and we're traders. We're just talking about what we look at, what we use, what works for us. But yeah, it definitely looks like that $30,000 mark was a capitulation point today. And I think the question is, does it go and probably try to fill that gap? And that was last Thursday, actually. That big one that you see there, about four bars to the right, was Thursday. It opened Wednesday night, and that was the Thursday bar. Let's put that in perspective. I've got a 46 for a low, 54.5 for a high. Friday basically barely moved. It opened 49, closed 50. That was a very small moving day. And then it gapped down on Sunday night when it opened again. It opened at about 45, closed at 44. So you can make an argument it's going to probably try to fill that gap between 44 and 45, John. So if you're a real short-term swing trader, that might be what you're looking at. But as far as the next month or so, I don't feel like it's going to necessarily be up any more than it's going to be down.
And I like that financial term you use, capitulation.
Yep.
So that's another one. That's
It
the
is.
fourth word that we have that only you and I are allowed to say on WagerTalk. The other one is catch a falling knife, whipsaw, and which is the one I'm missing?
Catch a falling knife, whipsaw, and capitulation are the 3 I can think of right now. But yeah, we haven't done capitulation before, and
Yeah, that's
also
first time.
that's a real high volume spike today. Here's something else I need to bring up though about these future contracts. There's 2 different ones now. The CME is the one we're talking about. It's the big one that's 5 Bitcoins. It's pretty hefty. But one that I've gravitated to in the last few months, actually, lower commissions, by the way, as well, at least for me on my trading platform, is the ICE crypto exchange. BAKKT is that symbol, and it is 1 Bitcoin. And it varies a teeny bit from the CME just due to the fact the CME opens at 6, closes at 5 p.m. Eastern, Monday through Friday. They're closed weekends, of course. The ICE crypto opens at 8 p.m. and it closes, I believe, like at 6 or 7. It closes a little later, but it opens at 8. So you get a little couple 2-hour window where the CME is open and the ICE isn't. But the ICE just rolls over tomorrow, actually. May 20th is the expiration for that contract. It's May 28th for the CME, which is the bigger traded contract. I'll put this in perspective right now. The ICE crypto one had 600 volume today on the May 20th contract, which is about to expire, and then the rollover contract for June had 740. So most people have rolled over, but that's why it was very volatile today, in my opinion. I've noticed that with the ICE contracts going all the way back to the fall when I really started getting involved with these Bitcoin futures. It gets very volatile a day or two before the rollover. And we see that in all commodities. We look at this May contract, 25,500 on the CME compared to like only 600 on the ICE. So that's, once again, it's a much bigger market. The June is only 4,000. So 25,000 versus 4,000 for June. The ICE contract expires May 28th. I dealt with this in the fall when I was getting used to these, and at least my broker, about 3 to 4 days before the expiration, closed it out, and it went to cash. So most people are going to have to roll out, I would guess. Let's see, the 28th is next Friday. So I think next Monday, Tuesday, Wednesday, you better look for a lot of volatility with Bitcoin because of the future rolls. Maybe we're seeing some of that now. Normally, and you know this better than me, being a professional back in the day with the currencies, it normally seems to go in the direction people are long or short already, in my opinion. And we have seen the market short Bitcoin here the last few weeks. You've been short, I've been short, the sharp money has been short. So I think maybe we fill that gap, 45, 46 in the next few days, and then it hits lower with the rollover Monday, Tuesday, Wednesday. If I had to predict the future with my crystal ball, that would be my prediction. But I'm a little bit more of a long-term 2-3 month swing trader, so I'm staying short for right now.
We have a chat room question, and I actually just focus on Bitcoin and 95% of the time. And like you said, I use the CME, and I get enough thrill out of that, believe me.
Right.
But do you have any comment for Las Vegas, Chris here, who we definitely know who he is?
Very
He
sharp.
should have he should have just been on our show.
Yeah.
But it's a good question. Um, I I will offer this part of it. The gap is related to what you were talking about, the arbitrage, the rollovers. And this whole move reminds me of when crude oil went negative back during the pandemic. We had, if you don't remember it, you can look it up on the charts. The, the closing contract was, I guess, minus like $30 a barrel. So you could have gotten a barrel, thousand gallons in a barrel of crude oil, delivered to your doorstep, and would have gotten about 35 grand in a check. It doesn't really work that way, but that's how
Ridiculous it was.
wacko
Yeah.
the arbitrage was becoming. And of course, we're in a pandemic, and the economy was really crashing down. There was no demand for oil, no demand for jet fuel, no demand for even gas for your lawnmower. So that's why that happened. In terms of the Bitcoin here, I think we're seeing a similar phenomenon. And and I'll tie this into real quick. Sentiment is one of the biggest things that connects sports betting with the markets. When Bitcoin, I should have put that on the chart. The sentiment reading was 82, and it was in the 80s for more than a month. So the fact of the matter is, there was just too many bulls out there. Everywhere you looked, somebody was commenting, "Oh, it's going to go to 200,000."
Right.
And you know what? It might down the road. I nobody knows whether that's going to happen or not, but it could. But when you have that many bulls, and just like in the S&P 500, that was in the 80s as well. For whatever reason, the markets will go the opposite direction of the way the herd is pointing. And the same thing in sports betting. You can look at the percentages, and it doesn't work every single time. Otherwise, we wouldn't be doing this show. And you have to tie it in with other indicators, like we're trying to show here on the charts. But when you have a baseball team that has won 5 in a row, and then all of a sudden 82% of the bets are on that team, that's a red flag. And it's the same thing in the commodities. It's the same thing in the currencies. There's so many things in our everyday lives where it applies. Where sentiment just gets out of whack, and we're all smart people. So it still amazes me that we're all thinking the same thing, and we potentially could get our faces ripped off for being part of the herd. So anyway, that's my take on the sentiment. Hope we gave him a good answer there for
Well,
what
I
he was
mean,
asking.
I think sentiment also goes hand in hand with our word of the day here. Like it's Pee Wee's Playhouse, word of the day. We need the bell. You need to get the bell ringing every time we say the word of the day. But I'll say it's capitulation. But sentiment is capitulation. I mean, if you get 80, 90% sentiment, that's the market's capitulating. Just like the bottom in 2008, or what was it, March of 2009 in the S&P, it was one of the lowest positive ratings ever in the history of the stock market. It was also the exact bottom. And I believe if you go back to like, what was it, September, October of 07, whatever the top was, I think it was one of the highest ratings ever. So
Yep.
it basically nailed it for one of the greatest, buy sell opportunities in the history of the stock market back in 07, 08, 09. And it goes back to what I say every time on this show. It's a zero-sum game. That's also a good term we like to use. Sports betting is not a zero-sum game. You could theoretically, the sports book could win 100% of the bets or lose 100% of the bets on any game. You always hear the old wives' tale, the old, betting 101, that they want balanced action. They put the point spread to get balanced action. Yes, that is true in theory, but it probably hardly ever happens. In fact, I would almost, unless you only have 3 bets on a game, I bet you never have balanced action on any game ever as far as money goes.
Right.
And it's
Yep.
not about bets, it's about money. They don't care if it's 100 bets in one bet. If they have that equal money, they make 10% vig. But you look at the markets, it is a pure zero sum. So for every Bitcoin futures contract that was sold or bought today, there was another one on the other side. So when it hit 30,000, there were a lot more people that wanted to be buyers at that point than sellers. And that was a 15-minute window, keep in mind, that it went from 35 to 30 right around 9 a.m. Eastern this morning on Wednesday, May 19th. I mean, so within that time of frame, and that's 30 minutes. It's also not a coincidence, by the way, that the CPI index, Consumer Price Index, came out at 8:30 a.m. The stock markets and all the other future markets open at 9:30 a.m. This happened at 8:50. Crude oil also dropped around that time. The 10-year note jumped right after it. A lot of stuff going on. I follow lumber. I've mentioned that a few times. It's up over 350% for the year. It is gapped lower from its all-time high about 5 or 6 trading sessions, including today. It gapped open lower, froze, and then by about 11:30, it gapped higher. Now it closed a gap higher, almost $63 times 100. So it's about $7,000 is the gap limit. It gapped open 7,000, frozen market. Started moving again an hour or so later, and then within an hour, it gapped and stopped at 1 p.m. at a gap high. So you're talking about a $14,000 gap, and that was an engulfing candle, high and low, open and close of the day with no tails. Something, I mean, I don't know what your research tells you on that, John. And it was almost a retracement back to some other gapping candles, and I guess that's a bullish sign. Obviously, I'm 100% certain it's going to gap open tomorrow. However, it might not stay there, but lumber's tricky. It's only about 400 to 600 contracts volume, even less on these gap days. And the big boys don't play in those markets, though, so I like to sneak in. It's been very good for me this year. Obviously, as a trend follower, a 300% move in any market is going to make me a small fortune. Bitcoin included had a 500% move once it hit 60,000, or actually almost a 600% move. But you can ride these trends down as well, and it's been a pretty good ride down here on Bitcoin also. What I want to point out real quick though, kind of goes to what Chris was asking also. I mean, the stocks and the crypto funds or whatever and all that other stuff, they had some real liquidity problems today, and they were actually, from what I read in some news, they weren't allowing people to necessarily cash out. It almost reminded me of the GameStop scenario. So once again, as I'm sure, John, while you, like myself, we deal with the future markets only, and I'd love to be short in doggy coin, as I've said many times, but there is no way to sell it unless you own it. That was down 42% at one point today. It did rally as well. Ethereum is on the future markets. That got hit also. But yeah, I can see some potential problems now with these crypto funds or whatever they're called, where you can actually own the digital coins. It's expensive. It's not as liquid. It's not as efficient. And I think today was one of their days of reckoning. So I think there's a lot of noise that's going to happen here the next few weeks. And you got to also wonder, is Elon Musk behind the scenes starting to sell off maybe? He said he isn't. But I mean, when maybe he sold today. I mean, that's what my guess might be when it dropped $5,000 in 15 minutes. I mean, you don't know what's going on.
Yeah, it had to be like back in the day. If you were in the pit when we had the hand signals, and you would have known who the seller was or
Right.
what the rumor was. But nowadays, to be honest, I don't even pay attention to like who might have been doing something. The reality is that it happened and it was swift.
Very swift.
And it doesn't take a tremendous amount to move because the liquidity is pretty. It's not a lot of liquidity in it, but it took a ton of selling pressure to move it that fast, that quick. So I'm sure tonight on CNBC, they'll have with Kramer. He's a great guy to listen to, and I'm sure they're going to have some great insight on what in the world happened today. And you could tell the stops were run too in the futures, and it just fed on itself. So once it got through that. Convincingly through the 38.2% Fibonacci retracement, it gained the acceleration, and then it really didn't even pause at the 50%. It just kind of blew right through it, and then that's when all the stop loss triggers started happening, and that's my opinion on it.
But when the 30,000, I didn't run the numbers on this, but it went from roughly 10 something to like 63. So that's a 53,000. So half of that would be about 27. So 2763 would be like 36. But my guess is 30 is pretty close to a 62, 63% retracement. Isn't that something?
And, yep. And this is the first time I ever saw a 38.2, 50%, and 61.8 hit on the same day,
Yeah,
all on
on
the
high
same day.
volume and on very high volume too. It's
Yep.
record volume today in the futures market. I think the other question you got to ask, and you might have a better feel for this than I do. I haven't dug into this as much because once again, I'm a systematic trader with the futures, so I don't really care what's happening. Just like you said, it doesn't matter to me who's doing it or what's doing it. I just like this volatility. It's great actually. But how do you think it's working between the cash markets and the futures market? I mean, 25,000 contracts today on the CME is obviously a pretty big market now. Which dog is wagging the tail, I guess, is my question. Do you have a feel for that?
It's usually, the cash market is always king, in the, in bond market futures, it always would follow what was going on in the cash and still does. And, the bond market sounds like it's very boring, but it's a enormous, market, trillions and trillions. The currency markets are by far the biggest
Sure.
of any market in the world. They trade 365 days a year. They never close. Um, and that makes it fun too, because in that market you can always get out. If you're long the yen and you don't want to be long the yen anymore, you have zero problem getting out of it. The problem with these cryptos now is that it does feel to me like the derivatives are wagging the tail of the cash markets. And if that is the case, that's going to have to consolidate and digest and work its way through until it becomes more of an equilibrium. And then that would be the time where I think we can sustain another bull run higher.
Yeah, my
Uh,
concern with the cash markets is exactly what happened today, is that these people weren't able, from what I'm reading, um, they weren't able to necessarily cash out. It's almost like they put a stop on the selling, like you do sometimes in these
yep.
stock markets. They talk about limiting the shortage because selling in the cash market is kind of like shorting, in my opinion. It's similar. That's what we talk about
Yep.
Dogecoin. You can't short it because you can only sell it if you own it. But I think this could give a lot of the recreational players some hesitation. Now, granted, you can say, well, they just won't sell; they'll hold. But I think they're going to want to be out, which means there's going to be a lot less buyers in the cash market, in my opinion, over the next several months after a day like today. They don't want this kind of stress and turmoil. So, although it might go fill that gap, because we just had that question about it filling the gap at 45, 46. I'm not basing a long-term trading strategy on that because I still think there's a lot of downward pressure just from some of these fundamentals. And then you still got the guys like Musk and stuff. You never know when they might sell. That can be another $5,000, $10,000 move like nothing. So yeah, I'd tread very carefully. And let's not forget, just 7, 8, 9 months ago, this was at 10, 12,000. It never crossed 20. And when it was at 20, when the future markets first opened like 3 years ago, it went from 20 to 10 very quickly and treaded water for several years. October, November is when it started to move again. It got back up to 20 by like December, and then it was 30 by January. It's a 200, 300% move, and then 60,000 by a couple months ago. So even down to 30 today, it's still 300 times what it was just 8 months earlier. So
Yeah.
yeah, it's
That's
going to be
exactly right.
fascinating. It's going to be fascinating to study and watch, and this is why I think systematically momentum's the only way to play this stuff, or with technicals like you use.
Yeah, and you gotta, at the end of the day, you can have all the technicals in the world. You just have to have that common sense. It's not a vehicle. There is no vehicle on the face of the earth that you can use to get rich quick type of thing. Because if you start thinking that, uh, it's probably going to go the other way around,
You can get poor
unfortunately. And
quickly. It's
it's
just as easily. You got a 50-50
right.
chance of getting poor quickly, too. What I will say about that, though, one thing you need to have, whether it's technicals, fundamentals, whatever, and this is what kills most people in sports betting, is money management discipline. Financial markets, it's the same thing. You have to have an exit strategy.
Yep.
Like I know, like I'm still short just based on my trend following methodology, but there is a point where I'll be long again, and I'll pretty far away right now because obviously the monster drop. I'm a little bit of a swing trader over not one day but over a month or so. But if this goes to 45, I mean I'll tell you right now, I can predict where I'll probably be just looking at my charts. Is that right now I'm a good ways away from where I belong again. But it's going to converge probably in the mid 40s. So if this does end up at 50 again, I'll be long at that point, probably in the late 40s. But right
Yep.
now, I'm just riding the wave over the next couple of weeks. I'm a viewer here. I'm a spectator, and if I get in at that point, I'll still be up from when I went short a few weeks ago in the 50s. So Yeah, like that 30 low was nice, but it didn't hold long. And on paper, you make 5, 10, 25 grand, then you lose it back 15 minutes later, but you're still up for the last week, for the last month.
It's the true case study of why you don't try to catch a falling knife.
Yeah,
And this is the best example we've had yet. And we kid about it on the show, but when it happens like this, it's pretty darn scary. I did want to show S&P 500 here.
yeah,
Um, so it kind of went the same way initially with Bitcoin, but you can see that the overall market structure is far superior than what's going on in Bitcoin, and I'm glad to see that. We do have an inverted hammer. We could retest the lows, but if you notice, we're nowhere close to the lows that were made several days ago. That's starting to create some bullish divergence. And relative to Bitcoin, it's now telling me that Bitcoin is an isolated event. And lumber is certainly one that's going to be right behind it because that is in Pluto land. And again, the sentiment on lumber is people can't get enough lumber at Home Depot or Lowe's to build whatever it is that they're building at home. And that is a form of a bubble. I mean, there's no ifs, ands, or buts about it. Crude oil has been down, but it's stable. It's around $60 a barrel. There's no concern there. So this is way different than 2008. That was much different story. There's no comparison between the two. And I am kind of glad that this is isolated just to Bitcoin, at least for now. If you're bullish on Bitcoin, I would add this, that if there's starting to be rumors of any fund having to liquidate because of massive losses, you don't want to hear that, because then that means there's going to be more selling pressure.
right.
And where that takes it, I have no idea, but that would require then probably several months of digesting this situation before you could get fundamentally bullish again on the Bitcoin. And again, it's just my opinion. I could be absolutely dead wrong. I could trade 70,000 tomorrow, and I could look like a fool. But we're just trying to offer insight, and also the lesson between bid and ask in the marketplace versus the betting lines in sports. It's exactly the same thing. The market maker of Bitcoin is not making a prediction. He's trying to make a market where honestly, he doesn't get caught on one end or the other, too long, too short. And the Vegas people that set the line are not making a prediction on the game. And they're making a prediction on our human behavior, on what we're going to bet on and how much we're going to bet on it and how many of us are going to bet on it. It's not Vegas saying that, the Lakers are going to win by 6 tonight. That's actually a reflection of what all the betting community is saying. The betting community is saying we're thinking that the Lakers are going to win by 6. So that's where the price gets set. I'm starting to rant, aren't I?
Well, no, I'll tell you one thing you brought up, though, which I think is really important on Bitcoin. We'll close out on this because I want to talk about the S&P also, is that we're in uncharted territory. What happens if, like you just said, one of these funds who's put 5 or 10% of their holdings into Bitcoin instead of cash or something goes under, or they need to liquidate? We've never seen that happen in history, probably. And we've never seen it happen with a crypto at all.
Not with a crypto.
And there's no way to know. I mean, if today is any indicator of how poorly, in my opinion, these exchanges or whatever you call them handled people wanting to cash out, can you imagine if some huge hedge fund or something had to do it? I mean, the bottom is out. So I'll bring up our other term. This isn't the one you were thinking of, but it's another one that you and I like to use. It applies to sports betting as well as risk reward. It applies to life. Balance and risk reward are my two hashtags in life. If you live by those, you'll have a good life. You'll have a healthy life. You'll just balance and risk reward. They go hand in hand. Diversification, by the way, is my other favorite. That's my triple play of hashtags for life, but and the markets. But the risk reward right now in Bitcoin is, the last several months being short Bitcoin had a bad risk reward because the most you can make was like 30 and you could lose 200,000 if it went to what people were calling. I'd almost say it's the opposite now. I mean, there's very little upside right now, and there's tremendous possibility of something collapsing as far as like a fund having to sell off or liquidate, and that could just cut it in half in a day. So I think all of a sudden within a month or two, we've seen the risk reward flip-flop. Not surprisingly, people are short, you and I are short. The S&P is what I've been saying as well. Yes, it's up. It's actually only up, I believe, 27% from the low in last March. It went from like 32 to like 40, from like
Yep.
33 to 4,200. Now it's at like 41, 4080. You feel like it's doubled or tripled, but it's only up like 27% mathematically, even though it feels like a monster run. It's still about 26.5% more than I thought it would ever go up. I've been long. My trend following method's been long, most of it. It's short now. By the way, it rolled over short about a week ago on all the indexes. It's tested my go long again, but it has not rolled over. I'm happy being short. I'm not a fundamental guy, but I'd much rather be short than long right now. But I think the risk reward on the S&P is just god awful. I mean, it on average over the last 100 years, it goes up 10% a year. But as you and I know, John, it hardly ever goes up 10. It either goes down 30, up 20. It's
Right.
just that's a rough average. But let's say 10 is your upside on average. I'd say it's even less likely now after a 27% run and some bad things coming. But we know for a fact that 50% is a realistic drawdown. We've seen it almost 3 times in the last 20 years. We saw it in 2000. We definitely saw it in '08. And we saw what maybe a 40% correction last year with COVID. So,
Yep.
I mean, you're talking about a 1 to 4 risk reward ratio, in my opinion, if not less, because I think there's some real room for something to crash and there's very little upside anymore. Everything is priced in. I mean, the market's been moving on 5, 6 stocks. I mean, the 5 or 6 tech companies make up 25% of all 500 S&P, and Amazon, Netflix, it's been Facebook, it's been the shutdown's been damn good for them and China. But I mean, you think there's another 50% for Amazon to run? I just don't see it.
Not with a PE up near 100.
Yeah, I just
This chart
yeah, and
is
there are some support levels like you said as well right now with the S&P. I mean,
yeah, we're nowhere close to even the 38.2% retracement.
the watch out below sign for me guys out there, for everyone listening, would be around that low last would have been last Monday, I believe, closed
Yep.
around 41. I'm looking at the 1 day here, closed around 40.63 on the future. Or actually, I'm looking at the cash index. I do the futures, obviously, but I occasionally like to look at the cash index because it's daily only, and you sometimes get some different support. It actually is a cleaner picture sometimes without the overnight stuff. So I'm just looking at the cash index here without the overnights from the future markets, and yeah, like 40.63 basically was what it closed exactly a week ago on Wednesday, and it went up after that. And now today's the closest it's gotten. The low for today is 40.61. How amazing is that? And we're sitting at 40.93 right now. So it basically bounced off that big red candle you see like 5 to the left there. And you see that tail today, just like Bitcoin had. So that is definitely the support level. We've got like 3 times it's hit that now. We're saying 40.60 is the support. If it closes below 40.60, I'd be very careful. There could be a big fall after that.
Yeah, it's a great analysis. I agree 100% with that.
And it's
The
really
chart I
that
had
line
up
right where the
here.
green and red one is, right where the big green and red one like 5 days ago. That line below it, I believe,
Yep.
is like 40.60. So and you go
Yep.
all the way over to the left, and there's a big, almost engulfing candle, like 20 to the left there in the middle of that other box, where you've got the
Yep.
Fibonacci retracement as well. So, yeah, it's amazing how well support resistance works on the S&P, and it's we could have that discussion on another show. Is there legitimacy to it? I don't care. It's a self-fulfilling prophecy because so many people look at it.
Yeah. Yeah. That's right. The one chart I had up here was this is MGM. No, that's not MGM. That's DraftKings.
Hmm.
So no problem in the sports industry there. And then that is MGM. So again, MGM doesn't trade a ton. Those volume bars are relative to one another, but it's stable. It's not. There's nothing like no red flags on that chart. So as many people in the sports industry that bet and go to Vegas and everything else, and also are involved in Bitcoin, it's not spilling over. And I like Endeavor for what it's worth. That's a UFC, and that was down today. But I think if you again you go to your financial planner, get some certified, licensed advice on these things, and make sure it's good for you. UFC might be good for me and Steve, but that doesn't mean it's even a remote consideration for some of you that are out there listening. So just be really careful with it, and get the professional advice that you need. We're just offering opinions.
Well, yeah, and also, I mean, I have not used the word investing all day, if you notice. I mean, this is
Right.
trading. And you and I realize that, obviously, but I don't want anybody out there. I think most people watching this get it too. We have a pretty sharp, knowledgeable audience, and these are guys that are short-term swing traders, but none of this is buy and hold. Nothing. Bitcoin, none
Right.
of this is buy and hold. I don't do buy and hold. It's not even on my radar. I don't take a team at the beginning of the season in any sport and say, I think they're going to be an above average team against the point spread. I don't play them every single game. I have never done that in my life. Now, I have play on teams, and I continue to go with them while it's working. And I might be a play on a play against stock or commodity, and I might be long or short it while it's working, but I'm not married to it. And sure as hell, none of these should be in anybody's investment portfolio. I mean, this is a game plan. This is a strategy that we're talking about. That's why it's the predictive playbook. We're trying to predict the best way to attack these markets in the short term. We're talking days, weeks, maybe months at the most.
Yeah.
Not 10 or 30 years like the average
Uh,
mutual fund holding for somebody. So that's the biggest takeaway. This is not investment advice because we're not even talking about investing. I mean, we could be doing a cooking show. This would be as much an investment advice as we're doing a cooking show right now.
yeah, you're right. Absolutely right. Well, I guess we'll cut it here for today,
Awesome.
and depending on what the market does, maybe we'll do another show before Manny's pub on Friday.
Yeah, this is good
And
stuff. I enjoy it.
speaking of which, coming up is Manny's Pub. We're going to have full slate. We have Ross Benjamin coming on. We have um, Borman coming on for the PGA, which starts tomorrow, the PGA Championship. And I believe I'm going to squeeze in a show for the PGA for my DraftKings because I do pretty good in the majors. And guys like David Behrman of ESPN has made my lineups even better just because he's on the show and he's won 9 of the last 11 events, which I've never seen anybody do. So the world is exciting. I've never seen Bitcoin do this. Uh, Honest to God, Steve, the only time I've ever seen anything like this that resembles it was Desert Storm.
Wow.
Crude Oil is at 40 and change. We're there at 1 o'clock in the morning on the floor, and it was a rout. It was supposed to be an even battle. Remember, it was going to be, it's going to take at least 6 months for that war to end, and it took about 6 minutes, and it was down limit. I forget how many days in a row, but it went from 40. I think the next trade that actually took place was at 18. So that's the closest I can think of anything, this phenomenal. So anyway, thanks for doing this with me. And Steve will be on the Manny's Pub on Friday, and I'm sure we're gonna force Tony Finn to talk about Bitcoin.
Can't wait.
Yeah, wait, capitulation now.
If
That's
he
his
had a
new
little,
word.
John, if Tony had a little bit more knowledge about Bitcoin, then we could consider him public. But he's not even knowledgeable enough to be public right now.
he he could be listening, and he's friends with Las Vegas Chris, so you never know. I hope
I
he
mean,
is.
what's the old saying? A little knowledge is a dangerous thing, and it's so true with the financial markets and the sports betting markets. You get so many recreational sports bettors who are like, "Oh, I know sports," so they
Yeah,
think they can bet on sports, and they're the worst sports bettors on earth, by the way. Someone who never watched every day in their life, like somebody's wife doesn't watch sports, could pick better. Just they'd have a 50-50 chance. The other guys are probably 45% long term, but yeah, Tony's like
it's
that
true.
right now with financial terms and Bitcoin. We need to educate him a little bit more so we can start fading him. But he's not even fade material right now. He's not public enough. And you tell him I said that. He'll give you a 20-minute answer why I'm wrong.
I will, and I'll also tell him that he's going to continue. Steve is going to continue to bet with your money.
Rob Vino. I don't bet.
Yep.
I would never touch Tony Finn's money. Who knows where that money's come from? My goodness.
I mean,
Rob
that money
Vino.
would have to be washed,
Oh, yeah.
literally. I
That's
mean,
true.
not laundered. I mean, just washed in a washing machine, just to be safe.
Sprayed with Lysol. All right,
But
I'll see.
we wouldn't be talking about him like that if we didn't really sincerely love the guy.
No, we kid because
So
we care. Yeah, tell the boys I said hi and hope I can join you guys Friday.
yeah, you got it, man.
Sounds good.
So for Steve, myself, Predictive Playbook, sportsmemo.com, wagertalk.com, may all the wins be yours.